In this video we are going to discuss about carbon tax, who coined it and how it is calculated. The term carbon tax refers to a form of environmental taxation that is designed to reduce the emissions of greenhouse gases, particularly carbon dioxide, CO2, into the atmosphere. The concept behind a carbon tax is to put a price on carbon emissions, thereby creating an economic incentive for businesses and individuals to reduce their carbon footprint. The revenue generated from the carbon tax can be used to fund environmental initiatives or be returned to the public in various ways. Arthur C. Pigou, an economist from the early 20th century, is credited with the idea that a pollution tax could use the market to solve pollution problems. David Gordon Wilson first proposed a carbon tax in 1973. New Zealand was the first country to propose a carbon tax in 2005. Finland was the first country to implement a carbon tax in 1990. Now, let's delve into what a carbon tax is and how it is calculated for different materials. A carbon tax is essentially a tax levied on the carbon content of fuels. It is typically expressed in terms of a price per unit of carbon, such as dollars per ton of CO2 emitted. The idea is to make the cost of emitting carbon dioxide more explicit and provide an economic incentive for businesses and individuals to adopt cleaner technologies and practices. How is carbon tax calculated for different materials? The calculation of a carbon tax can vary depending on the jurisdiction and the specific goals of the policy. However, a common approach involves assigning a cost to each unit of carbon dioxide equivalent, CO2e, emissions associated with the production or use of a particular material. CO2e is a measure that combines the effects of different greenhouse gases based on their global warming potential. Here's a simplified overview of how carbon taxes might be calculated for different materials. Identifying emissions sources. Different materials have different carbon footprints based on their production processes and sources. Identify the key sources of emissions associated with the production, transportation, and use of each material. Measuring emissions. Quantify the amount of CO2e emissions associated with each stage of the material's life cycle. This involves considering direct emissions from combustion or industrial processes and indirect emissions from the energy used in production. Assigning a carbon price. Establish a carbon price, typically in terms of dollars per ton of CO2e. This price is often determined by policymakers based on climate goals and economic considerations. Calculating the carbon tax. Multiply the total emissions of each material by the assigned carbon price to calculate the carbon tax for that material. This tax may apply at various points in the supply chain, from production to consumption. Revenue allocation. Determine how the revenue from the carbon tax will be used. It could fund environmental projects, renewable energy initiatives, or be returned to the public through dividends or tax cuts. Thank you.